Friday, June 13th, 2025, Maneco 64, home of alternative economics and contrarian views. Good morning, Clive.
Well, good morning, Mario. We've got a bit of worry in the Middle East today, haven't we?
Yeah, and before we move further, I want to recommend a book. And people might ask, why the Templars? And it's by Dan Jones. It's a really good history book. It says the rise and fall of God's holy warriors. And uh, being Friday the 13th, that's some people say that it's related to them. They were rounded up on Friday the 13th of October, 1307 in Paris by King Philip IV. And they were burnt at the stake. But a lot of people think some of them were able to escape and that they're still around. Well, when I was in Rome, Clive, they have a headquarters in Rome in one of the most exclusive shopping streets in Rome. So who knows if they're still around? And it's interesting that this bombing of Tehran is happened on Friday the 13th by Israel. So, I mean, I'll give my 2 cents on this. Well, my hope is that it doesn't escalate into a bigger conflict. And by that, I mean, I hope that China and Russia don't get involved, but we never know. And the other thing that we're seeing, Clive, and you can talk about that too, the markets are pretty, well, they're not too too volatile. I mean, the Dow is down 1.2%, the futures, Nasdaq 1.4, and the S&P is down 1.3. But also crude oil, Clive, it's traded as up as $75, as high as $75. It's now at 70. And of course, gold is back above 3,400, the spot price. So yeah, your take on what's going on?
So yes, we saw that there's been attacks on Iran's nuclear facilities, and Israel has taken out the top two generals in Iran, and Iran has said they're going to retaliate both against Israel and against the United States. And I saw a headline just come across my screen a few minutes ago from the Daily Telegraph, which said that there are drones from Iran flying towards Israel, and Israel says they're going to try and shoot down as many of them as they can. So that's all I know.
Yeah, I just want to show this meme has been around for a while. So it says here, Iran wants war. Look how close they put their country to our military bases. I thought that was a good one. So I mean, the main excuse that Israel's giving, and I'm not going to get too much into the politics, but the main reason is that they say Iran is developing a nuclear program to develop weapons. Iran says it's just for energy, but I guess I can understand why Iran might want to develop nuclear weapons because Israel has nuclear weapons and the US has all these bases surrounding it. But anyway, Clive, how do you think the markets are going to be impacted? Do you think I guess it all depends if this thing escalates, right?
Yeah, I mean, whenever there's an event like this, there's always a short-term reaction in the markets. But markets, as a general rule, tend to forget about the near-term events and move on to the bigger picture over time. And you know, mustn't forget that ever since the beginning of time, we've had wars coming and going, and whether we'll have another one somewhere in the Middle East or elsewhere, we don't know. But I think the markets, for the most part, I mean, it depends what you're looking at, whether you're looking at the precious metals market or the stock market and so on. First of all, the stock market, I think it has a life of its own because each company has its own individual set of circumstances, and it may or may not be affected, but mostly not by geopolitical events. On the other hand, gold is known as the world's frightened bunny. So every time there's an event, people say, well, there's going to be some people who say, I must increase my holding of gold, or I haven't got any. Perhaps I should have some in case I can't eat next week and I need to use the gold to buy my food because you don't know what's coming. And there's always this nuclear threat from the major powers. So I think we do get this short-term reaction this morning on the gold price, and we see that already. I'm looking at the futures here. The futures are up $35 on gold. Um, Silver, the futures are unchanged on silver. I don't know if you see that. I haven't got the spot price of silver in
Yeah,
front of me.
silver is hasn't really moved as much. I've got it here. 1 second. Silver is down 4 cents, 36.30 the spot. But I brought this chart up here of gold in dollars, of course. But the other charts of gold in other currencies, they look very similar. To me, Clive, this looks like it could be a breakout. So it could be pointing to sometimes, the technicals in the markets forecast events. So to me, that's worrying because it says that maybe this event that's happening now in Iran and Israel is going to escalate because gold looks very bullish there technically. And the reason I say that is because we had this move here since the beginning of the year from 2600 all the way to 3500 in yeah, towards the end of April. And then we've consolidated for 1, 2, 3, 4, 5, 6, 6, 7 weeks. And now it's starting to pick up again. That's called a consolidation. And usually the consolidations have a 3 in 4 chance of resulting in a continuation of the previous trend, which was higher. Sometimes it doesn't work, but it looks like this is working here. I guess the key level will be that high from April at just well, it was 3,500 exactly as you can see here, the high. So yeah, that's what I'm looking at. And Clive, the other thing is the dollar. The dollar looked very weak up until yesterday, and that's the dollar index. But I
Yep,
see that,
97.73 I see today.
yeah, but I see that it's rebounded a little bit because as we speak here, the the pound, for example, is down a bit. It's down a third. So, but it was down a lot more, and the euro is down 0.3. So the dollar's rebounded slightly. I'm not sure this military or potential war might even help the dollar. So here's the dollar index. It's like the opposite of gold. We've had since the beginning of the year, it's gone down. It's consolidated, and now it looks like it's going to go down again. And I want to clarify that I don't, in the short term, weaker dollar index does help the gold price, but in the long term, it doesn't really matter. I think gold is going up versus all the other currencies because I'm going to put this as a monthly chart because we can look further back. If you look here in 2008, when the dollar bottomed at all-time low, gold was at 1,000. So now the dollar is higher and gold is higher. So that's what I'm trying to say. Your opinion on that, Clive, and on the dollar and how it could impact, let's say, bonds as
Yeah,
well.
so all currencies, all Western currencies are inflating to some extent. And it's really two things which are going on. One, there's been the huge increases in the money supply, which came in the COVID pandemics and the global financial crisis. But the other side of it is the rapid increase in government borrowings. So as the governments borrow, they basically put that borrowed money into the hands of the public. The government gets poorer and the public at large gets richer. Obviously, it's not the whole public, but some parts of the public get richer. And that money has to find its way into something. And rather than finding its way into more baked beans or sliced bread, it's finding its way into tangible assets like gold. And this spree of governments spending more and more and getting deeper and deeper into debt does around the world doesn't look like it's about to stop. So I think that means that at the end of the day, there'll be more and more wealth on the planet, negative wealth for the governments, meaning that the gold price will probably trend upwards. Obviously, we're going to have it's not a straight line. I mean, people have to understand that we will for sure have our bad months, bad days, maybe even a bad year or two. But at the end of the day, as the wealth on the planet increases at a faster rate than the economy, those sorts of tangible assets like gold are destined to go higher. And we've seen that just about every tangible asset you can you can name, whether it be oil or house prices or stock market prices or basically anything else that you want to look at, heirlooms, paintings, it doesn't matter. They've all moved higher because there's enough people, more people on the planet who can afford these things, thanks to the government having printed all this money by effectively borrowing it and distributing it to the public at large through social programs, whatever.
You mentioned there that the wealth is increasing, but wouldn't you agree with me that it's not real wealth? It's like ephemeral because it's all been inflated. The price has been inflated. I
Yeah.
think it was Warren Buffett who said there's a difference between price and value. And I think that's what gold is telling us, that it's not a real wealth. But we've also got, Clive, politicians, and I'm not having a go just at Donald Trump because all politicians like low interest rates. But he's come out again, and Donald Trump says he may have to force interest rates change in attack on Jay Powell, and he even called him a numbskull, which is won't help his. That's not the best way to win friends and influence people, I would say.
Yeah, I mean, it's not the sort of behavior I would expect from someone who's supposed to call himself a politician. You know, politicians are supposed to be polite and negotiate and get things done by mutual agreement, not by becoming a ordering people around. So one has I don't want to say too much, but I think we'd all like to see the people in charge having a balanced approach to everything. And I think we've got this situation going on at the moment where we've got a very flip-flop situation where one day he could be your friend, next day he could be your enemy, and you don't know where you stand.
Clive, there's a lot of distractions. What's happening now in Iran, what's happening politically, the tariffs. But there's one thing that I've noticed and I've been tracking for a while is this. It's money supply, M2. And I've got here trading economics, and I've subscribed to it. I mean, you can go in trading economics and look at some of the numbers, but sometimes if you want to go further back, you have to have a subscription. But this is M2, and to me, this is inflation because inflation, the classical definition is when governments and inflated the currency supply. That's what it means. Inflation is not rising prices. Rising prices is the consequence of it. And yes, they they try to control it here from April 2022 or thereabouts up until last year. But now it's already making new highs, the money supply. And we can see that during COVID, it went through the roof, M2. And you tend to think, Clive, that it should be even more because they don't add like T-bills, which are almost like money. And then if you look at other countries, it's even worse. For example, if you take a country like Australia and you look at it's under money, their M3, uh, they haven't even stopped for breath since COVID, and maybe that's why the gold price in Australian dollars is like 5,200, and the same thing goes for. I don't want to be here too long, but show you the euro area. Euro area, for those of you who don't know, they are the countries in the European Union who use the euro. And not all countries, of course, in the European Union use the euro. But so this, I mean, and the same thing is happening here. And the ECB, they're aggressively cutting rates. But Clive, the way they get away with it is that no one looks at money supply anymore because people have been trained to believe that the CPI is inflation. And we know that with the CPI, governments can tinker with it, manipulate it, and make it look a lot lower. And the other thing, Clive, I spoke about this the other day, 2% CPI over 36 years means a halving of the value of the currency. And they seem to think that 2% is okay. So just wanted to put that out there. Is that something that you've been looking at, the money supply, or?
Well, you said it earlier, Mario. The money supply is the money supply, the money in circulation, notes and coins and bank deposits. But if you add in the short-term treasury bills, and then the question is, do we add in the 2 year notes and do we add the five? At the end of the day, there's an awful lot of things which are in today's world quickly and easily convertible into money. And that includes right through to the treasuries, the 30-year treasury. You can turn it back into money in microseconds with your mouse. And what we do know is that these things which are convertible into money, specifically government debt, the level of government debt is rising at a much, much faster pace than the economy at a much faster pace than the consumer price index. So we have an increase in the level of government debt in the USA, and it's not different around the world, of around 7% a year. And that looks like it's going to accelerate. At the same time, we have GDP growing by, I'm going to say less than 2% probably at the moment, but let's call it 2% for simplicity, and inflation growing by 2%. So what's inflation measuring? It's measuring the price of things which are made by robots to a large extent. I mean, there are other things in there. That's why if it was just things made by robots, the prices would actually be falling. But a large part of the CPI is composed of manufacturing costs, where the cost of production is effectively zero. You've just got the distribution cost, the transportation cost, the advertising cost, the marketing costs, and those sort of things, which is part of the cost of the product, but it's not the whole cost. But when I think people measure their inflation, they've got to look at, if they're looking at inflation compared with their savings and what they're going to spend their savings on. So the question I would say is, if you're saving money, what are you saving money for? If you're saving it to buy a house, well, all things being equal, putting mortgage rates to one side, which do affect house prices, but all things being equal, it's likely that house prices will rise at a faster pace than the consumer price index, because houses can't be made by robots, and there's a growing population, there's a growing amount of money, and there's the supply of housing is not increasing nearly as fast. So house prices, for example, if you're saving, are likely to increase by a much faster rate than the consumer price index, and they have done historically. And I think that's set to continue. Same thing would apply if you're saving for your retirement. What are you going to spend your money on in retirement? Well, it's going to be things like the luxuries you've been saving for all your life, like traveling the world. Well, my question is this: are hotel rates getting any cheaper? Well, definitely not. They're going up by relatively fast rates. You want to take a cruise somewhere, it's certainly going to be more expensive than it was 10 years ago, and probably, I'd say almost certainly, because a large component of that is the human labor on the cruise ship. It's probably going to be more expensive by something like 7% a year than the 2% a year retail price index. Likewise, if you're getting older and you have to have medical care, or you have to go into an old people's home, we're seeing the prices of these things again rising by a faster rate than the rate of inflation. So
Yeah.
inflation, when you look at the CPI index, isn't really telling you the true depreciation of the value of your money. Therefore, you should, if you're saving for the long term, you should keep your, inverted commas, money in fiat denominated assets. You should keep it in something which is going to more likely hold its value compared with the greater increase in the wealth of the planet.
Yeah, and I would argue that if we had sound money, uh, I mean, people would be a lot better off because governments and central banks and bankers wouldn't be able to inflate the money supply as much. So all the gains from productivity we'd be able to benefit from it. Can you imagine, Clive? Because what more technology do we need to make things more productive? And I think That's a huge problem, and I think it's starting to impact. Well, I think we were already in a recession in Europe. I mean, I was listening to this lady. She's got a big YouTube channel. She's from Austria, Survival Lily, and she said that a third of Austrians serve. There was a poll. They're saying that they have less purchasing power with their money this year. Here in the UK, we had the GDP numbers. It shrunk GDP for the second quarter more than expected. I think it was 0.7%. And unfortunately, the UK economy, I mean, we're going to learn the hard way because we've got people in charge who don't have a clue, but sometimes people say they do have a clue. They're just doing what they're told. It almost feels like like they're doing a controlled demolition because they keep digging deeper. And by that, I mean, instead of cutting the size of government, cutting regulations, cutting taxes, they're actually punishing the private sector here. So I don't hold much hope. And I even see now in the mainstream media, they're saying that, what I've been saying for the last 5, 6 years. I even have a playlist entitled UK Economic Collapse. I think I started in 2021. But the good news, the silver lining, Clive, is that things always go in cycles. So it's not going to be the end of the world. We're going to come back, but unfortunately, we're going to have to do it the hard way. Um, and talking about, like you said, that holding fiat money over the long term is a bad proposition. I just wanted to give a shout out before we proceed, Clive, to Dirty Man Safe, one of my affiliates. And basically, as you see here, is underground safe solutions to securely store your valuables. So there you go. And in this day and
Um,
age, yeah, go ahead, Clive.
Mary, I'm wondering, can you get all your gold coins in that cylinder?
Well, I've told people that you put some of it in there. I mean, depending
Yeah,
how much you,
it probably held a million pounds worth, I guess.
I don't know, but I just think it's not just gold, but also documents, crypto wallet, crypto passports. I'm not into cryptos, but yeah, check it out. You get 10% off if you use my promo code below in the description. So, Clive, you sent me some charts today, and I'm going to bring one up. And I mean, we don't follow platinum too much, but platinum is a precious metal and it's also an industrial metal, and it's had a tough time in the last decade or so. Uh, I think in 2011 or 2008, when gold was at 1,000, platinum was at 2,300. And recently it was still under 1,000. So it's really kind of lagged a little bit like silver, but now it's taking off. So I'll let you, talk about this, seeing that you
Um,
built this chart.
what you're looking at, first of all, I'll talk about the chart, then I'll talk about the fundamentals for platinum. Um, on the chart, you're seeing since around the start of the year, it's actually December 2024, but that's how I just set it up like that. That platinum is in the last few weeks, you can see on the chart the green line. You can see that platinum has absolutely surged by about 20 something percent. In fact, I can tell you it's up since the start of the year, it's up 33%. Uh, and in the last 30 days, it's up 26%. Gold is up about 5% in the last 26 days, last 30 days. So 26 versus 5 for gold. So uh, platinum is definitely outperforming gold in the very short term. And so I decided to go and have a look at what's going on with the platinum market. And to do the research, I used an artificial intelligence product, which I go to. It's a very expensive one, actually. It's called Manus AI, but it does really good reports. And what I read here is that the platinum production is the lowest in 5 years. It's down 4% year on year. Um, and in the first quarter of this year, platinum production is down 13% compared with a year ago. Most of that platinum is coming out of South Africa, 80% of it. And South Africa, or the South African mines, so far this year have seen 91 days with electricity blackouts, which are affecting the mining operations, basic power restrictions and curtailments. So that's why the supply is down 13% compared with a year ago. They say that according to the current trajectory of there's a supply deficit. In other words, more platinum is being consumed than is being mined in the over the last few years. And on the current trajectory, there will be no more above ground stocks within 2 to 3 years if that trajectory
Yeah,
continues.
Clive, just to chime in here, Russia is also a big producer of platinum, isn't it? But we're
Yeah.
not really dealing with the Russians right now.
No. So it's about 80% comes out of South Africa at the moment.
Yeah, and I also think like this might be because you've got some other metals here. You've got the palladium seems to have been still doing pretty well this year.
That's the
Still,
white line on the
yeah,
chart. Yes.
yeah. Silver is doing well in the last few weeks as well, not as well as platinum. And then we've got what else? Gold, of course. Could this be also, aside from your fundamentals there, could it be the markets forecasting a lot more demand for these metals and commodities in general? And that could kind of square with what's going on geopolitically in the world and also monetary policy wise. So we've got central banks cutting, we've got prospects for major wars. And if you look historically, wars are always inflationary.
Yes, so I think what's happening here, a lot of people are starting to wake up and realize that the gold price is on the rise, and gold is a precious metal. So they're saying, "Oh God, maybe I missed the boat. Gold is 50% higher than it was. What can I buy in the precious metal sector that isn't up 50%?" And when they look, they're going to find the white metals, silver, platinum, and palladium are not performing or haven't performed anywhere near as well as gold over the last few years. So I think what's happening is these are people who are starting to wake up and realize they need to be in something which protects their wealth against monetary debasement. And they're looking around for something which hasn't yet moved. And I think that's so what that's indicating is that there's a growing body of people who are realizing that they need to protect their wealth, their money, or their fiat money against debasement, and they're starting to move into other things. I think that's good for gold as well. At the end of the day, it just means that gold takes a little bit of a pause while people pile into platinum and silver, and then after a while, platinum and silver will be up, and then I think we're going to have all of those rising together. Now, maybe I'm a little bit less of a fan of palladium because that doesn't have the fundamental demand behind it in the way the other metals do. But if you look at silver and platinum, there's strong industrial demand coming out, and there's a supply deficit. That supply deficit in both cases is going to get worse in the coming years. And if you look at platinum in particular, there's a real shortage of platinum at the near end where the auto manufacturers are struggling to get their hands on platinum, with the result that the near-dated platinum, i.e. spot market, is trading at a higher level, slightly higher than the futures. In other words, the futures are in backwardation at the moment, at least when I last looked. And the lease rate for platinum currently, historically it's been zero. It's currently at 13.5% annualized, which again is an indicator that there's a strong demand to get hands on platinum now, and obviously people are hoping to get their hands on the platinum for industrial use later on by buying the futures, which are currently a little bit cheaper. Lastly, we've got this, according to some data from China, this is according to the customs data, they've increased their platinum imports. The way Manus wrote it, Chinese platinum imports are surging, and jewelry demand for platinum in China is growing by 5% a year in terms of volume. So
Yeah,
again,
Chinese
we've got
like
lots of
yeah.
sources coming for platinum in a market which is already very tight. So I
Yeah,
think platinum. I'm not going to say platinum is going to outperform gold because I think gold runs with whatever runs upwards. But I think because it's not risen with gold up until the last week or two. Uh, uh, it's still got a. Let's put it another way. I think that's why it played catch up with gold. Now I think we get to a situation where all the metals rise together.
yeah, and Clive, I also think it's a sign that the commodities are ready to go higher, and gold seems to always precede the commodity. It's like a signal, and it doesn't happen overnight because if you look here, towards the end of 2018, gold was at 1,200, and then by July 2020, it was almost at 2,000, and it was only after this sharp drop here in April of 2020 that commodities started catching up. And then and gold had already topped. And now we've been consolidating. And this triangle I drew here, I didn't draw it right now. It just came up because I've been looking at this triangle, which is really bullish. And this is the CRB. This is the Commodities Research Bureau Index. And I think, yeah, I think the commodities, platinum, everything else is going to start catching up. And maybe what's happening in Iran could be the trigger because it could lead to a lot higher oil prices. And oil prices, I want to reiterate, are not inflationary. What's inflationary is printing money, but what higher oil prices do, they affect prices of everything else because we need oil and energy to do everything. So you're going to hear a lot of people saying, "Oh, inflate." If it happens, of course, inflation was caused by oil, but don't be fooled. They said the same thing in the 70s. Ultimately, it's all the money printing. And Clive, you've got a chart of the gold platinum ratio. Do you want to talk a little bit
Yeah,
about?
let's have a look at that. So this shows you how many ounces of platinum you could buy historically with an ounce of gold. So if we go back to the start of the chart, you can see, I could have gone back further maybe, but you can see that in 2011, an ounce of gold would only buy you zero point 0.8 ounces of platinum. In other words, an ounce of gold would buy you less than an ounce of platinum. And at its peak a few days ago, weeks ago, it would buy you an ounce of gold buy you over 3 ounces of platinum. Now, that chart, you see a very, very steep fall in the chart at the end, where it's dropped down to 2.7 ounces. So an ounce of gold would now today buy you 2.7 ounces, which means that basically it means that platinum is increasing, relatively speaking, to gold at the moment. So we could return in some way, shape, or form to the norm. And that doesn't mean to say that the gold price goes down. It means that the platinum price probably rises at a faster pace
Yeah,
till we get to a more normal ratio of somewhere in the middle of that chart,
yeah,
maybe 1 to 1.
yeah. And Clive, what else are you seeing like this week that you think is important for the markets? It looks like the bond markets for now, they've calmed down, they've risen a little bit, and yields have come off. And there was a big refunding by the U.S. Treasury. I think 122 billion in 3 years, 10 years, and 30 years. It seems to have gone through quite smoothly, but yeah, I'm not too sure, especially if the oil price really reacts positively to what's happening in the Middle East. Yeah,
Well, I think there's one thing to be aware of. When we have a geopolitical event such as just occurred between Israel and Iran, there's an impact on shipping costs not only because the oil price goes up, but there's another factor which is quite important, and that is the insurance cost. So when there's an increased perceived risk in uh, moving huge container ships around, they might have to take different routes. They might have to, they might be at risk of attack. So the insurance premiums do go up, and we've seen just overnight the shipping rates start to rise sharply, and that obviously does have an impact on the price of goods at their end destination.
Yeah. And I just want to bring up this map. This is the map of Iran. Looks like a cat. They call it the cat country, I think. But what's more interesting, though, is this little strait here. It's called the Strait of Hormuz, which is controlled by the Iranians. And about 20% of the oil that's consumed every day is shipped through the Strait of Hormuz. So that's what people worry about. If Iran blockades that strait, none of the oil coming from like Saudi Arabia or UAE or Bahrain or Kuwait or even Iraq can get through. And that's why it's so significant, a conflict in the Middle East. But we still have to wait and see. Clive, Strait of Hormuz. Keep an eye out for news about this.
Yeah, I mean, again, what everybody should be doing is ensuring that they have a diversified portfolio of assets. They shouldn't have all the eggs in one basket. And if we do have any sort of crisis or situation in the world, you can be sure that the governments are going to accelerate their borrowing and accelerate their printing, and that will devalue the money you have in your bank. It'll devalue the value of bonds and fiat denominated assets you own. Fiat denominated assets are assets which are going to be repaid in money. So it's not equities, it's not houses. A fiat denominated asset is something like a bond or a money market fund. So, be aware that you don't, if you have all of your assets in these fiat denominated assets, you're running a risk of faster depreciation going forwards than we've been seeing in the past. And God knows, we know how fast it's been in the past. It's been pretty fast. Those people who've been waiting to buy a house for 10 years are finding the house is 5 times the price they wanted to pay 10 years ago.
Yeah, I just brought this up here. It's quite interesting, Clive. It's the volume of crude oil and condensate transported through the Strait of Hormuz by origin, where it's coming from, millions of barrels a day, and where it's going. And what's interesting, this is old, 2018, so it's changed, but gives us a rough idea. China is dependent a lot on that oil. India, Japan, South Korea, the United States, not that much, but it will make a huge difference on the oil price if that happens. And anyway, um, I think yeah, I just want to go over the markets here, Clive. So it's like 10 past 9 a.m. London. We've got spot gold at 34.18. So it's up 33, the spot price. It's up 1%, but it's been as high as 34.44. Uh, and silver's been as high as 36.65, but it's at 36.30. And the Dow is down 1.1%. Nasdaq 100 is down 1.27. S&P is down 1.1. And actually, the dollar is a little firmer. And crude oil is at 71. It's up 6%, but it's been as high as 75, the WTI, Clive. So I think we're in for a volatile day today, later on. And yes, it's Friday the 13th as well. So any final thoughts, Clive?
Well, it's SmackDown Friday, of course, as usual. So I never take too much notice of
Yeah.
where prices close on a Friday, because anybody who's got a long position, well, sorry, big one. The bullion banks who've got long or short positions have a tendency to close them off at the
Yeah.
weekend. So I wouldn't take too much notice of if you see a decline in prices towards the end of the day. It's kind of normal.
Is that's in gold and silver,
Yeah,
Clive,
that's right. Gold and silver
alluding,
tends to get
allude
smacked down.
SmackDown. Well, yesterday they also call him Mr. Slammy. They smacked silver down first and then gold followed, but I think silver went down to 35.40 and then it ended the day above 36. So I think Mr. Slammy's powers are waning rapidly. And yeah, with that, Clive, I'm going to wish you and the viewers a great weekend.
Thank you. Bye bye, everybody.
Bye.